Hey everyone, welcome back to the channel. If you've ever thought about investing in Bitcoin, or maybe you've seen people making huge profits from it, this video is for you. Bitcoin has created millionaires, but it has also caused many people to lose money. And the difference between those two groups is not luck, it's knowledge and strategy. In today's digital world, Bitcoin is everywhere. You hear about it on social media, in the news, and even from your friends. But jumping into Bitcoin without understanding how it works can be a costly mistake. Many beginners enter the market at the wrong time, with the wrong mindset. So in this video, we're going to break down 5 important things you must understand before investing in Bitcoin, so you don't become part of the people who regret it later. Understand what Bitcoin actually is. Before you invest, you need to understand what you're buying. Bitcoin is not just internet money. It's a decentralized digital asset that operates without a central authority. Its value comes from supply and demand, scarcity, and trust in the system. There will only ever be a limited number of Bitcoins. Many people invest without understanding this, which makes them panic when prices drop. Knowledge gives you confidence, and confidence helps you stay calm during volatility. When you understand the fundamentals, you stop reacting emotionally to price movements. Instead, you make decisions based on logic and long-term perspective. Don't invest because of hype or FOMO. One of the biggest mistakes is buying Bitcoin just because everyone else is talking about it. When prices go up, people rush to buy because they're afraid of missing out. But this often leads to buying at the top. Smart investors don't follow the crowd. They follow strategy. They enter the market with a plan, not emotions. Hype is temporary, but losses can be long-lasting. If your decision is driven by fear or excitement, you're more likely to make mistakes. Take your time, do your research, and never let social pressure control your financial decisions. Only invest money you can afford to lose. Bitcoin is highly volatile. Prices can rise quickly, but they can also drop just as fast. That's why you should never invest money that you need for daily expenses or important needs. Think of Bitcoin as a high-risk investment. It has high potential returns, but also high uncertainty. By limiting your risk, you protect yourself from emotional stress and financial damage. This allows you to stay calm, even during market crashes. A smart investor survives the game first. Profits come later. Managing risk is more important than chasing quick gains.
Think long-term, not short-term. Many people try to make quick money by trading Bitcoin frequently, but timing the market is extremely difficult, even for experienced investors. Instead of chasing short-term profits, focus on long-term growth. Bitcoin has gone through many ups and downs, but over time, it has shown strong growth. Patience is key in investing. Those who hold with discipline often outperform those who panic and sell. Short-term thinking leads to emotional decisions, while long-term thinking builds stability. The longer your perspective, the less noise affects your actions. Keep learning and stay updated. The world of cryptocurrency is constantly evolving. New technologies, regulations, and market trends appear all the time. If you stop learning, you fall behind. And in investing, lack of knowledge can cost you money. Follow trusted sources, understand market cycles, and continue improving your financial knowledge. The more you learn, the better your decisions become. Successful investors are not just risk takers, they are continuous learners. They adapt, improve, and stay informed in a fast-changing environment. So remember, Bitcoin is not a guaranteed path to wealth, but it can be a powerful opportunity if you approach it the right way. Don't let hype control your decisions. Focus on knowledge, strategy, and discipline. Start small, manage your risk, and think long-term. Because in the world of investing, survival is the key to success. Your journey will not always be smooth. There will be ups and downs, moments of doubt, and times when you question your decisions. But if you stay consistent, keep learning, and remain disciplined, you put yourself in a strong position for the future. At the end of the day, successful investing is not about being lucky. It's about being prepared. If you found this video helpful, don't forget to like, share, and subscribe for more simple and practical financial content. And I'll see you in the next video.